Right. Okay. Hello, everybody. Right. I can see lots of familiar names. Hi, John. Hi, MRC. I wish I knew all your first names, but I'm going to go by your nickname. But thank you all for attending. Pleasure to always be here. Right. As you guys know, the foreign exchange market from a trend trading perspective, I guess, has been very, very quiet. So what this really means is that during this kind of period, this is where private traders really should be going into what we call capital protection. This is really where we want to be standing aside and not really pulling trades. Of course, this is a very difficult concept for a lot of people to understand because as traders, we assume that to be making money, we should be pulling trades daily. And I kind of understand that, especially as a lot of people adopt the day trading approach. People who are familiar with my approach to markets will know that I'm very much a trend trader. So I'm looking for long-term positions. So what this means is that when there's trends in play, I'll have positions running throughout the duration of the trend. As positions start reversing, as trend structure starts reversing, this is when my stops will start getting triggered, and this is when I'll start exiting my positions. What this then means is that I'll then be standing aside until the next round of trends appear. And this could be potentially for weeks, maybe even months. And this is where traders really find the challenge in trading. So that's what we're going to cover today. The title of today's webinar is how to protect your capital in a low probability environment. Okay. And as I focus predominantly on foreign exchange in these webinars, what people don't really seem to know about what I do, apart from maybe people who follow me on social media, will know that when foreign exchange is quiet, I'm trading stocks. So that doesn't mean I'm not trading. It just means I've left one market and moved to another. Okay, so let's really focus. Let's really narrow down on what exactly is happening in foreign exchange, and is this a good time to be trading? Okay, so the screen setup that you can see in front of me, in front of yourselves rather, you should all be very familiar with this. I can see a few people in on the webinar, so I'll quickly go through this. Top left, what you can see are four screens. Top left, I have my watch list. And it's quite an extensive watch list. It starts at the Aussie dollar, US dollar, and it goes all the way down to the South African rand, Japanese yen. So a very extensive watch list. In the top right corner, I have the monthly time frame. In the bottom left corner, I have the weekly time frame, and in the bottom right corner, I have the daily time frame. So instantly, what you guys should be recognizing is that I'm looking at the much bigger picture. Okay, I know a lot of people look at the daily and then go down to the 4 hour, the 1 hour, 15 minute, 5 minute. You know, as a trend trader, I'm looking at the bigger picture. Now, the first thing I'm going to do really is I'm going to start with the Aussie dollar, US dollar, and I'm not going to load up any indicators. It's usually at this point where I switch to another page and I'll have a certain set of indicators on there. But I'm going to go straight to the daily time frame. And what I want you guys to tell me by putting in the box, please, in the question box, in the answer box, whether you think this is in an uptrend, a downtrend, or a consolidation. It's just one word: uptrend, downtrend, or consolidation. Okay, thank you. Down. Okay. Any other suggestions? A couple of people. I know there's a question there. What is a suggestion for people trying to build a capital to be able? Okay, we'll leave this towards the end. Okay, down, up. Okay, so you see, we're getting a real mixed bag of answers here. Some people saying uptrend, some people saying downtrend, some people saying consolidation. Okay, so what we can really break it down into is understanding price action, and what we really want to know is what is the long-term trend and potentially what is price currently doing, and maybe even the shorter-term trend. Okay, the long-term trend is quite clearly down, and we can see that, right? Whoops, wrong way around. Yeah, so the long-term trend is quite clearly down. Can we agree on that? Yes or no? Yeah, yeah, I think most people will agree on that. Yeah. The shorter term trend, we could probably say, is heading up. Can we agree on that? Yes or no? Yeah. yep. Fantastic. Okay, but if we look at recent price action, would we say that this uptrend is a trend reversal, or is it simply bouncing between support and resistance? So would we say this is a trend reversal or price bouncing between support and resistance? Bouncing, Emmanuel? Yep, thank you. Don't know for sure. Okay. Bouncing. Okay. Yep. Okay. Don't know for sure. Pan on fire. If you look at this whole area, what we've got is price going up, coming down, going up, going down, going up. So would we say in recent price action that this is in a trend reversal, or it's bouncing between support and resistance? So the answer is yeah, it's consolidating. Perfect. It's bouncing between support and resistance. So in terms of the overall direction of the trend, what we would say that the trend is down, but it's currently going through an area of consolidation. Now, if we look at the actual trend structure, what we had was a downtrend. So this is going back to September of last year. We had price in a trend. Now, after the trend, price then went through consolidation. Then we had another leg down, and now price is going through another area of consolidation. Then we had this leg down. Price is simply going through another area of consolidation. Now, the thing about areas of consolidation is that we generally don't know how long that consolidation can go on for. You can see that this area of consolidation was for probably a couple of months. This area of consolidation maybe for a month. Now, this area of consolidation, 1, 2, 3, we're now going into like the 4th month of consolidation. So this is where the challenge comes in. Understanding that when price is in a trend, this is where we trade. When going through consolidation, we really need to be patient and let price dictate a breakout. Now, as the trend is down, our bias is with a breakout to the downside. Now, this is not guaranteed, but this is what we're playing on. What we're playing on is probabilities. Okay, that's a good question. At what point you say the trend is reversed? That's a good question, and we'll come to that as I start loading up my indicators. Okay, so what we have here is, extend, right. What we have here is an area of resistance, and at the bottom here, let's take it from there, we have an area of support. So this is generally what price is doing. It's bouncing between support and resistance. If we look at this whole resistance area here, we will see that this area of resistance is associated to the round number 0.80. Now remember, round numbers are very significant. Round numbers act as very good areas of support and resistance, and they also act as good target levels. And you can see here exactly how price is interacting with this round number. So as the trend is down, my bias is for this resistance level to hold strong. What I'd like to see is a reversal. Price come back down to this support level, a break and a close of this support level and this pivot level, and I'll then like to see price target the next round number at 0.70. Okay, so as a long-term trend trader, now again, I know range traders. What range traders are doing is going short here and long here. So every time it comes down to support, they'll go long, and every time it comes up to resistance, they'll go short. Okay, that is one way of trading, but as a private traders and as a trend trader, for me, that is not the most beneficial and not the most powerful way of trading. Trading long-term trends and then using compounding is far more profitable. Can I just get a quick yes that you guys understood that? Quick thumbs up. Yeah, brilliant. Okay. Yep. Yes is coming through. There's a few yeses coming through on private chat as well. Okay, so let's look at one more chart to really sort of solidify that, okay? And that's the euro dollar. Okay, now, again, no indicators. We're looking purely at price action. Is the long-term trend up, down, or sideways? The long-term trend. And this should be easy. Yep, exactly. Yep. We're getting lots of downs. And we can see that. We can very clearly see that the long-term trend is down. Okay, and the trend has been down. The trend has been down since May of last year. And if we look to the right-hand side, we can see that it is associated to the round number 1.40. Again, you can see how price has interacted with the round number. It found resistance, and then it started targeting the next round number. So we had price target 1.3. Once it targeted 1.3, we wanted it to target 1.2. After 1.2, it went to target 1.1, and we can see since then it's gone through an area of consolidation, and now we're starting to see strength to the upside. Okay, now if we look at price action in a little bit more detail, we had resistance at this level and we've had support at this level here. We had price bouncing between resistance and support. It's now broken above 1.10. It's broken through this resistance level. Resistance is now support. We had the classic break retest, and now we're starting to see strength to the upside. So potentially we could be seeing signs of a trend reversal. If price starts to continue up, it's going to start targeting the next round number, 1.20, then back to 1.30, and then back to 1.40. So I like to keep things very simple by using support and resistance, and then looking at round numbers for price to then target when it's in a trend. Now, the positions that I had running since September, and again, people should be very familiar with this. The short positions that I had running since September have now been stopped out, and they've returned very, very, very good profit. Okay, again, we can see how after every move, price goes through an area of consolidation. What we're then looking for is a breakout to then establish a further trend direction. Okay, now let's move things on to the next stage. And this is where then I'll start answering certain questions which have already been asked, which is, how do I know when price has actually reversed? Okay. Now, if I move on to the next page, what you can now see is a few indicators that I've loaded on. I'll start with the monthly time frame. Now, the monthly time frame I use for the much bigger picture. What the monthly time frame does, it gives me very clear areas of support and resistance. So I have a proprietary tool which establishes the resistance levels, and that's the red tool here, and the support levels drawn by the green line. Now, this is a proprietary tool which automatically updates itself. So as new support and resistance levels have been confirmed, and this happens at the end of each year, this tool will automatically update itself. If you look at the pink lines are representing the highest price, the lowest price, and the closing price of 2014. Again, these are major areas of support and resistance. If I go into the back end of my software, and if I unclick that, you can see how the software will automatically draw all the highs and the lows and closing prices of previous years. So simply with the click of a button, it puts everything on there for me. I don't need to see all of those. I just simply want to know what's happened in the previous year. And you can see that now I've got a much cleaner looking chart. Now, how do I use these pink lines? Very simply, if the pink lines are very close together, they tell me that in the previous year there was no trend and that price was going through an area of consolidation. If the pink lines are quite far apart, that means there was good trend in the previous year. So the pink lines actually tell me a lot about what happened the previous years and act as areas of support and resistance. And if you look at last month, the month of March, we had a move to the upside and it found resistance at that low point, and we had bounced back down again. So this is a good example of how it interacts with the pink line. If we go to the weekly time frame, we can see that I've got the weekly 200 moving average. Now, the weekly 200 moving average, again, as you guys should all be familiar with, is that it gives me a bias in price action. So what that means is that when price is above the weekly 200 moving average, that's a bull market. That's when I want to buy. And when price is below, that's when it's a bear market, and that's when I want to sell. I also have a proprietary trend filter. So if I go back to the naked chart, if I go back to the Aussie dollar, if I go back to the naked chart, you can see now that these are your bog standard red and green candlesticks. So if we look at this particular area of trend, red, then consolidation with green candles, red, green candles, red, and now we've got a mixture of red and green. With my proprietary trend filter, it totally ignores those breather areas and it just gives trend direction. And that's what I'm looking for as a trend trader. So now I'm going to put the two things together. When I'm below the weekly 200 moving average, I want the red trend filter telling me high probability areas of trading. And when I'm above the weekly 200 moving average, I have the green trend filter, suggesting me high areas of bullish trend. I ignore the red above and I ignore the green below. I have the same logic on the daily time frame. So I've got the daily 200 moving average, and I have my proprietary trend filter giving me areas of bullish and bearish trend. So how am I going to use this? Basically, what I'm looking for is the trend. I'm looking for price action to be below the weekly and the daily time frame. I'm looking for price action to be below the weekly and the daily 200 moving average. And I'm looking for the trend filter to be the same color. So in bear trend, I want the trend filter to be red on the weekly and the daily time frame. And I want in a bear market and in a bull market, if I'm above the 200 moving averages, I want the trend filter to be green. So you can see now how I'm starting to look for areas of high probability setups. Now, if you look at what's currently happening, we can see that the trend filter on the daily is changing from red to green in a pretty short amount of time compared to what we had before. So this is quite clearly telling me an area of consolidation. Because the weekly is still at red, this is not telling me a trend change as yet. This is simply telling me that the long-term trend is still down. The daily is going through consolidation. What I'm looking for is a break below this pivot level. This will then mean that the weekly is red and the daily is red, and we're then back in alignment and a continuation of the trend. When the weekly trend filter starts turning from red to green and the 200 moving averages start getting broken, this is then when we are in a trend reversal. So someone asked me earlier, how do I know when we're in a trend reversal? As a trend trader, the earliest is when the daily 200 moving average is broken. So once we start getting the green trend filter to continue above the daily 200 moving average, this is when I will consider the price changing from a bear trend to a bull trend. Okay. Stop right there. And I'm going to just quickly ask the question, does that make sense, guys? Is that clear? Quick yes or a no. Yeah, brilliant. Okay. Yeah, lots of yeses, and there's some yeses coming through on private as well. So, yeah, okay. So people get that. Brilliant, okay? So remember, guys, this is not a sexy, fast-paced, in and out, exciting, high adrenaline approach to trading. That's the route that most people go down, because day trading is considered the quick way to riches. Now, I'm not saying that day trading cannot work. Day trading can work. What I'm saying is that it's not the most beneficial, and it's certainly not the most profitable way of trading. It's a lot of effort for very little rewards, because it requires a lot of screen time. It requires a lot of management. It requires usually a high number of trades. It can be quite stressful. Yeah. So, yeah, exactly. Yeah. So day trading is what you will find a lot of on the internet. And that's simply because people have different agendas. People want to make money in different ways. You go to a lot of forums, a lot of it is short-term trading. And that's because the brokers encourage short-term trading, because they want you to, take trades and then they profit from your spreads. As I said, it can work. It's just not the best way forward. If you look at the greatest traders, the most successful investors, people like Warren Buffett, look at George Soros, Jim Rogers, John W. Henry, the owner of Liverpool Football Club. He's a trend trader. You look at the turtle traders, the guys that have made consistent growth and very large growth over relatively short periods of time, then that is the way that you want to be trading. That is the way that you want to move forward. Okay, now let's have a look at what the Aussie dollar is doing. And the Aussie dollar is basically going through an area of consolidation. This is where you really want to be standing aside. Now, guys, let me say this. I've got positions running. My positions have been running since November. These positions are still open, but because price is going through an area of consolidation, I'm simply holding. And the odds are very much in my favor. And when price breaks and closes below here, this is when I can then start adding further positions to the positions which have already been running. So this is where patience comes in. If we look at the overall picture, the trend is still very much down. All it's going through is an area of consolidation. What I'm looking for is a break and a close below here, and then for price to start targeting the next round numbers. 0.70, a break and a close below here 0.60, break and a close below here 0.50. So there is still a good 2,000 odd pips for price to then target. If we look at past price action, look at the structure of the trend. These trends have continued for long periods at a time. So there is absolutely no reason why this trend cannot continue. Okay, and this is a good question. Why not buy in the area in a downtrend? Okay, what's the logic behind this? What people are trying to do is predict tops and bottoms. So the reason why, yeah, you can do that. Sure. Okay. So what you're saying is that enter in on the pullback. Is that what you're asking, Emmanuel? Yeah. Okay. Now, that goes back to the daily chart. Does this look like a good area to be trading pullbacks? Yes or no? Okay, Emmanuel's saying yes. Okay, Emmanuel's saying yes, that's fine. But guys, do you agree? Would you say this is a good area to be trading pullbacks, or is this an area where you really want to be standing aside? Okay, now let's think about it. If we take this first move, now this first move potentially is where you could have entered in on a pullback. Okay, and I can accept that. I can accept that. And I can say, yeah, that's fine. Potentially, this could be the first where you could enter in on a pullback. Can we agree on that? Yes or no? Yeah, 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 fine. Okay, we can all agree on that. Okay, since then, what has happened? Well, at this point, your pullback entry has come into profit. We can agree on that. Yes, your pullback entry has now come into profit. Yes or no? Yeah. Okay, good, good, good. Right, since then, what's happened? Price has just gone into consolidation. Can we agree on that? Yes or no? Yeah, 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 good, perfect. Right. So what does this mean? What this means is that as traders, we need to understand what are the pros and the cons of each strategy that you take. Now, I prefer to trade breakouts. Why do I prefer to trade breakouts? Because breakouts confirm the trend. This is a serious disadvantage to trading pullbacks. When you enter in a pullback, there is a good chance that you can get stuck in consolidation. Also, when you enter in a pullback, there is a good chance it could continue into a trend reversal. Okay, if it's a good pullback entry, then there is a good chance that you make more profit when price breaks out and continues in the direction of the trend. So what we need to weigh up as the traders is whether we prefer to trade breakouts or pullbacks. Then we need to understand what are the advantages and the disadvantages. The disadvantage, of course, to trading breakouts is that it could be a fake breakout and price could reverse and stop you out. But if you look at the actual direction of the trend, as a trend trader, breakouts are far better than pullbacks. For me personally, I'm not saying that that's everyone's choice, but for me personally, breakouts are better than pullbacks because it confirms the trend direction. It confirms the continuation of trend. It's a very good example of how a pullback entry can get you stuck in consolidation. And of course, depending where your stops are. By the way, FX Boyki, you know about me and my stops. I don't mention anything about stops on my presentations because stops are really where training comes in. This is where you need to really understand price action. Of course, people use different strategies. People use different risk managements. And I've always mentioned about stops in terms of ATR. If the average true range of any particular currency pair is 100 pips per day and people are using 30 pip, 40 pip stop losses, there is a very good chance that you're going to get stopped out. So people need to be much smarter with how they use stops. And that is where people go wrong because they don't really know how to use stops. Once they know how to use stops, then they then need to understand how to use compounding. Okay, so it's those two things which are the most important parts of trading: stop loss management and compounding. And they're the two things that are least understood. People understand, okay, breakout entry, pullback entry. You can go to a 5-minute time frame, 5-minute entry. People can find entries all over the place, but it's understanding exit management and understanding compounding are the two most important parts of trading. Can I get a quick yes that you guys understood that, please? Yeah. Okay, and you guys really, I cannot stress how important exit management is. It is look, I usually make a little bit of a joke about this, okay? But let's think about relationships. Getting into any kind of relationship, you find a nice, attractive man or a woman, depending on your sex and depending on your orientation, of course. And you meet this lovely person and you fall in love. And it's very easy to start seeing the good points in a person and getting involved in a relationship. It's very, very easy. Now, let's think about it. 6 months later, you'll realize that this is not going to work out. Is the exit management far more difficult than the entry management? Can I get a yes or a no? Okay, right. So it can, you see what I mean? Like exit any kind of relationship. Okay, taking it back, let's bring it back to being serious. The exit management is usually far more difficult than the entry. Okay, and that's the same thing with investments and trading. People really need to focus on the exits because that determines how much money you make. If you look at the actual structure of the trend here, these pullbacks are quite spiky. You want to be able to ride out these spikes without getting stopped out. If your stop is too tight, you're going to continuously get stopped out, and this gets really frustrating. And that's not how you're going to see growth on your account. Yeah, exactly. It does. It can do. Of course, it does. Okay. Let's go to the euro dollar so that we really understand what's going on here. Right, euro dollar. A very clean bear trend. Found resistance at 1.4, broke through the support level at 1.2. And you can see that remember guys, this is the monthly chart. So price has continuously created lower lows. Very nice trend that we profited from. Just so that you guys understand that when I entered in at around 1.3 and I've exited around 1.1. So around 2000 pips. But through good risk management and through compounding, me almost 15,000 pips, and I've only taken about 6 trades. Those trades were running since September, and because of compound growth, it has accelerated my profit. Okay, I really want you guys to take a moment to really understand what I'm saying here. Now, my question to you then, guys, is if the euro dollar has returned me 15,000 pips and very, very, very good percentage growth, how many trends do I need a year to see very good returns? Give me a number. Right. I mean, look, the reality is, guys, a lot of us have money sat in a bank, and that's why we've turned to trading to see more returns than what a bank is giving us. So if a single trend like the euro dollar can return me over 30% on my account, all I need is one good trend a year to see better returns than the bank. However, these trends appear again and again and again every year in different markets. You often hear the expression once in a lifetime opportunity. And I understand where that comes from. A once in a lifetime opportunity is true if you're looking at only one currency. A lot of people only look at the euro dollar. A lot of people only have a handful of currencies on their watch list. So because you only have a handful of watch lists, sure, this will then be a once in a lifetime opportunity. However, if you're looking at foreign exchange, if you're looking at stocks, if you're looking at UK and US stocks, if you're looking at commodities, if you've got a bigger portfolio, you then have a lot more opportunity. Let's take oil. Oil has trended from $90 all the way down to $50. I've traded that whole trend. Yeah, I'm not just a section of it. I've taken a good percentage of that trend from $90 down to $50. It's another good example. Okay, if we look at what's going on the weekly time frame, we're trading below the weekly 200 moving average, and we still have my proprietary trend filter, which is red. But if we look at the daily time frame, we're trading below the daily 200 moving average, giving us a bearish bias. But the trend filter now has changed from red to green. So I've got red trend filter on the weekly, and I've got the green trend filter on the daily. So what does this tell me? Does this tell me bullish area, bearish area, or is this telling me consolidation? A quick answer in the box, please, guys. Right. Great. Is this a trend reversal? Yes or no? Should I be looking to buy this? Yes or no? Or should I be standing aside? Right. Someone has just said yes. Guys, remember, standing aside, you only go long when price has broken the daily 200 moving average. The daily 200 moving average has not been broken. I've got green trend filter below week daily 200 moving average. Forex can range for a long time. I totally agree. It can, but remember, we don't need to worry about it because when trends appear, we can see very good growth. Okay, now again, if you're a short-term trader, an intraday trader, you may see this as a reversal and, view it in a different way. I'm a long-term trend trader. Now, you see the idea of the 200 moving average giving us a bias in price action. This is not something that I've created. This is what hedge funds do. This is what institutions do. This is what long-term investors do. They use the 200 moving average to guide them. So the fact that a lot of private traders, retail traders are going long below the 200 moving average, this simply comes from a need to be trading and really a lack of appreciation or understanding of how to read price action. Hard to stick with it when in profit. I'm not 100% sure what you mean by that. Could you elaborate on that, please? It's the 200. It's a simple 200 moving average. It's hard to stick with longer term trends. Yeah, it is hard to stick with longer term trends. And the reason why it's hard to stick with that is because people are looking for consistent growth. They want to see profit consistently every day. That's not what investing is about. The way money is made in investing is very different to the way we understand how to make money. How do we understand to make money? Well, we all come from a background where we've had to work. We've had a job. So we go to work, we work a certain number of hours, and at the end of the month, our boss, or if we are our own boss, we give ourselves a particular salary based on the number of hours that we've worked. We then have maybe bonuses that are added on top. Okay? In trading, money is not made the same way. If people think that you can make 1,000 pips a week consistently every week, or £1,000 a month, or whatever you're targeting every week, then you've really not got to grips with the natural movement of price action. And that is where people go wrong, because they think that in trading, you can target a certain number of pips. And because you can target a certain number of pips, it must be able to replace my 9 to 5. That's not the power of trading. The power of trading is leveraging your salary, leveraging your savings to the point where you've seen phenomenal growth that in 2 or 3 years, you can then quit your job altogether and become a full-time trader. Can I get a quick yes that you guys are understanding everything that I'm saying? Yeah? Okay, and I know maybe my tone comes across maybe a little bit aggressive. No, I've been told that I'm quite aggressive. I get it. But it's not aggression. This is passion. This is really me trying to understand or really educate private traders, people like you who want to really nail this and understand that I've come from the same background. I was a photographer. I was an English teacher. I've worked long hours. I've worked on salaries which didn't fund a lifestyle here in London. I'm in London. I don't know where you guys are, but I'm based in London, UK, and it's very, very, very expensive. So to be able to fund a decent lifestyle, you've got to be having good money coming through. But then to have good money coming through, you're then usually sacrificing it with long hours. So with trend trading, you don't have to sacrifice anything. You've just got to give it time. You've got to let it work for you. And the question is, the second time someone's asked me, I'm just going to go back up, is how do you suggest building capital? Okay, it's very, very simple. You've got to work. You've got to have a job that funds an account. Yeah, thanks, John. Yeah. I'm going to pass on that. I do like it up there, but I'm going to stay down here for now. But you've broken my chain of thought. What were we talking about? Building an account. That's it. You got to have a job. Okay, you got to have a job. You got to fund an account. You got to fund an account. You got to save. You got to treat your fund. You got to trade. You got to treat your trading account like a savings account. So every month you got to add to it. You got to add to it. You got to add to it. You got to build. You got to save. If it means working two jobs, you got to work two jobs. I was a photographer, I was an English teacher. I was working two jobs at the same time. I was working 7 days a week because I knew that the more money I could get, the more money I could put into my account. So that's my answer. Work, save, trade, build. Okay. Is it that when price gets above the 200, that one? Yes, exactly. Yep. So just to clarify, you want to go long above the daily 200 moving average and you want to go short below the daily 200 moving average. But it's not as simple as just going long above and short below. You want to then also be looking at the weekly time frame to be able to tell you whether you are in simply a correction or a change in direction. So this is now green, but this is still red. If this turns to green and this is still red, then and it's above the daily 200 moving average, I'd still be a little bit cautious because I'd want this to start turning green as well. So you really want to be, excuse me, you really want to be looking for alignment between the weekly and the daily time frame. Okay, and then you want to be looking at areas of support and resistance on the monthly time frame. Okay, let's look at one more chart. Excuse me, guys. Let's have a look at one more chart. And one chart that people should be familiar with is the US dollar Swedish krona. Yeah, what would you like me to repeat, guys, please? Jen, what would you like me to repeat? And Emmanuel, if you could just put it in the box and then I'll go through that again. Oh, okay, fine. Okay, so you mean just basically repeat the alignment. Okay, so someone asked me if price broke below the 200 moving average, would I start going short? The answer is yes, but not straight away. It's not as simple as just going long above and short below. Okay, that's a very simplistic way of looking at it. What I'm looking for is confluence of events, right? You guys have heard of this term. Can I get a quick yes that you guys have heard of the terminology confluence of events? Yeah, yeah, okay, perfect. So what does that mean? What we're looking for is many things happening at the same time to suggest that we have more chance of making money than losing money. Okay, and again, like people have understood the term confluence of events, but let's break it down. Okay, if you've got the wrong set of confluence of events, then you're not going to get the results that you want. Let's look at a car. Imagine you've got a Lamborghini sat in your driveway. Okay, so you've got a very nice car sat in your driveway. It could be a Lamborghini, Ferrari, Mercedes, whatever your car is. Okay, however, within that car, you're putting diesel and it's a petrol engine. How far is your car going to go with you repeatedly putting diesel in it? Yeah, it's the same logic with trading. You've got access to a very powerful machine here, yet you've got to be fueling it with the right fuel. You've got to be putting in petrol engine. If it's a petrol tank, you want to be putting petrol in. So you want to make sure that you have the right set of confluence of events. So when price is below the daily 200 moving average, I want to have the red trend filter. But at the same time, I also want to have the red trend filter on the weekly time frame. If I have the red trend filter on the daily time frame and the weekly time frame is still green, this is not a confluence of events. When price breaks below the daily 200 moving average and I have the red trend filter and the red trend filter on the weekly time frame, then I'm starting to have confluence of events. I then start looking at these in relation to areas of support and resistance. Is that clear? Jen? Yeah. Okay. Okay. Now this is a common question. Like I don't have the trend filter. What should I use? Okay. Let me put it to you guys. Okay. I'm assuming a lot of you guys are using things like MetaTrader. Can I get a quick yes or a no? MT4? Yeah, okay. Now, I'm also assuming that a lot of you guys are using either, if you're not using MetaTrader, you're using the platform that your broker is giving to you. Can I get a yes or no? Okay, right. So my question then is, how would you expect a free source software to get you the results that you want? If you look at the industry that you are in, whether it's engineering, accountancy, photography, it doesn't matter. Whatever industry that you are in, are you guys using free equipment or are you using highly specialized equipment for your industry to deliver the best results for your clients? Okay, you guys really need to think about this. You know, free source software is not good enough to deliver the results that you're looking for. You need to have specialized software. Okay, and guys, ultimately, this is where training comes in. Okay, and part of this presentation is to make people aware of what it takes to really see results and consistent growth. And out of the people on this group, the handful of people that really want to take it to the next stage will then get in touch with me and say, Zaheer, I want to get trained. As part of the training, you get access to this software. I will give you all of these proprietary tools that we have. This is given to you as part of the software. Now, someone has mentioned Heikanashi. Okay, I've done a bit of research into Heikanashi, and I kind of understand what it is. But going back to what I said earlier, what are the two most important aspects of trading? Exit management and compounding. So even if you've got Heikanashi candles or whatever they're called on your chart, just because it highlights a trend direction doesn't mean anything if you don't know how to manage your exits and if you don't know how to manage your compounds. Is that clear, guys? Does that make sense? Can I get a quick yes or a no on all of this? Okay, now another thing, guys, that people should be very familiar with is that I don't do any sales pitches. I don't drop any of that at the end of my presentations. There's no, if you join today, it's a £99 discount deal. There's none of that. All the information that people want can be found on my website. Okay, so if you're serious about wanting to take this to the next day, and some of you guys have been on my presentations now, on these monthly webinars, I've seen, you know, you guys come, and I'm very grateful for it. Don't get me wrong, that you guys come to my webinars every month. However, I then tend to see the same questions from the same people. So that what that says to me is that over the last 6 months that I've been doing this, that you guys are still struggling with the same points. And I can tell you from personal experience that some things require training. You need to have training. Okay. I'm coming towards the end of the presentation, so I'm just going to move you guys over to the websites that I'd really like you guys to have a look at. Okay, so the first thing is I've got an About Me page. I don't know if you guys use About Me, but it's a really cool little website. Okay, so if you go to the About Me page, there's a big scary picture of me. You can ignore that. But if you go down to the bottom, there's some useful links on there. Oh, hang on, let me just log out of here. Sorry, guys. Bring it back up again. And scary picture again. Go back down. Right. Some useful links. If you guys are in London, if anyone is in London, I'm doing a meetup next week. Of course, it's free to attend. It's in King's Cross. If you can attend the meetup group, all the information is on here. It'll be great to meet up and chat and get to know you people in person. Okay, so please come along, and I'll be talking more about mastering price action. Okay, I've got links to all the other articles that I write for. I write for the Huffington Post, YouTube channel, which is updated regularly. Instagram, guys, please get onto Instagram. I always put up a lot of useful charts. There's the odd motivational quote, etc. But there's a lot of useful information all regarding trades that I'm entering into. Okay, so a lot of good stuff on there. Can you type the link in the chat, please? Yes, the link to what, please, John? Instagram? All attendees. Okay, so Control V, that's Instagram, and that is the meetup group. Yeah, are you guys getting the links? Quick yes there, please, guys. Yeah, brilliant. Okay, and guys, if you want to know more about the training, there's a link right there. Okay, what I would suggest, guys, is don't focus too much on what you're going to have to pay for it. Focus more on what you're getting for it. Okay, and if you look at the length of the mentoring, you're looking at 6 months, 1 year. So pretty extensive mentoring here. It's not like a one-day course where you're chucked in and you're chucked out. Okay, there's a whole mentoring program that goes with it. So please really look into it. If you want to know more, get in touch and we can take things from there. Okay, you're welcome. Thank you guys. Have a great, great, great day wherever you are. Any questions, please get in touch. Else, take care and hopefully see you on the next one. Thanks, guys. See you later. Bye, bye, bye.